Hello, everybody, and welcome back to episode 9 of Scale School. Today, we're jumping into a big, hot topic, a good topic, and we have a great guest to help us through it. That is privacy and agentic finance. But before we jump into it, let's get these intros out of the way. David, hello, my friend. Why don't you give the people a little bit of an introduction about yourself?
Absolutely. So my name is David. I'm one of the co-founders of Keyrock. Been building the business for the past 8 years now. And for the purpose of our conversation today, what you need to know about the company is that we are a power user of blockchain technology and DeFi. And so in the same way, we are a financial institution, and in the same way that we service majority of the digital asset industry, we are typically also one of the most active participants, right? So we go around, we use all the custody technologies, all of the exchanges, all of the DeFi protocols, all of the chains. And it's interesting because we typically see it from a view of somebody that is stress testing the systems and really trying to understand what value we can get out of them.
Nice. Yeah, excited to dive in more into yourself and Keyrock. But before we do that, we have the professor in the house who is definitely focused on me and not doing other things. Mr. Sawyer, how are you this fine Tuesday morning?
I'm very focused on you. How are you doing?
Yeah, not bad. Slept awful. Really, really bad night's sleep. Yeah.
Same. I feel you there. It's okay. I'm doing good overall though. So it's okay. And if I'm looking over here, just so you know, it's not because I'm doing something else. I have my notes next to me. They're just on the monitor. So if I don't respond, I'm doing something else. And I do my best to not do that. So anyways, where were we? All right, intros. Hey, everybody. Sorry, it's been a long weekend. I've been up way too late, too many nights in a row, writing and building things. So you know how it goes. Anyways, for those of you that don't know me, because Mr. Falcor here forgot to do the full long Game of Thrones intro, which he knows I love, not. My name's Sawyer. I run Scale Developer Success Team. I work with all of our partners, our applications, our enterprises to help them build and find success on Scale. I also work across a number of other areas with Scale and the broader Scale ecosystem. And for those of you that do not know Scale, Scale is a blockchain network. Specifically, we are very focused on bringing the next billion agents on chain. How are we going to do that? Well, through a combination of privacy, finance, and AI agents, which are really, really, really cool. So we're going to talk more about agentic finance and privacy today. Mr. Falcor, back to you.
Yeah. Privacy and agentic finance. It's been blowing up over the past couple of weeks, months, and years. Recently we've seen so many companies, looking at stable coins that have been entering into the space. I saw recently that yesterday, PayPal was like, "Hey, I want to be a bank now." If anyone saw that, which I thought was interesting. They filed the stuff they need to be a bank in the United States of America. Alongside that, we have like Revolut partnering with stablecoin companies. I saw Klarna releasing a stablecoin. That one was weird. And the area is blowing up. But I'm not sure if you guys saw yesterday as well, the US official talking about how blockchains are the most visible institution for finance in the history of the world. And now I'm curious what people think of that. David, what do you think? Is it a good thing? Is it a bad thing? What are your thoughts?
I mean, it has to be a good thing, right? But there is a tail event where it becomes a bad thing, right? Where governments take too much control and power over society, and that extreme transparency and automation could then build a Big Brother type society, correct? So there is that risk. So far, it looks like it's not going that way. So hopefully, there is a lot of competition out there to make sure that those actors are kept in check. But it could happen, right? That all of these financial structures that are in place in today's economy, where regulated financial institutions have to comply with a lot of rules to, for example, help the government to catch the taxation of flows, is something that the government could actually start doing on its own. Right? Like if they have full control of what's happening, they may as well issue their own stable coin, and then have the capacity to not even ask you to pay the tax, but just outright take it from you. And so that's definitely a risk, but overall I think is good.
As a non-American, the idea of having to like pay your own taxes is just weird to me. That you guys just don't already do that. Like it's crazy. You guys got to pay like tax. Like, isn't it like if you go to a store, the price isn't actually the price. It's like more than that, because they add tax on at the end. I think I had that issue, and I don't know if Canada's the same. But I was in Canada one time. I went to buy some socks because I went for a week and I forgot to pack socks. So I went to go buy some socks. And now these socks, I'm still pissed off about this, right? Were like $40. I went to some random store and I bought like 6 pairs of socks and they were $40. And then I went to the checkout and it was like 60. And I was like, bruh, what is this? So I'm going to say, from my point of view, I would love, you guys to be able to, tax already be there, but that's just me.
That's only the US, bro. Like the rest of the world doesn't do that shit.
There's taxes on literally everything, everywhere, in every way you can not possibly imagine. It's that bad. But I think when it comes to like all of the changes happening in the financial world, I think one thing that's really interesting is we're actually seeing, I think, the government give up some control. They seem to be becoming more accepting of the fact that human beings want some level of privacy. I think it's, and we talk about this all the time, it's as long as it maintains a level that they're comfortable with. Like, I still don't really know if we're going to see a future where things are like 100% private and, people are depositing into privacy protocols and like the money's, mixed and changed and all this stuff and like all that. I just don't really know if that is a feasible outcome for the majority of society. But I do think that, today, the money in my bank account, the government, if they want to know what's in my bank account, they can, like, there's ways that they can essentially go and ask for that information, but they don't have direct access to my bank account 24/7. If I send money in the United States greater than $10,000, or I make a payment greater than $10,000, that gets reported to a government entity called FinCEN, which is one of the monitoring agencies for financial crimes. Again, this is just part of being a citizen in the United States. Like, if you do these things, that's how it works, and you can't really get around it. But it still passes what we call the barista test, right? The barista test, which our amazing VP of Sales and Strategy, Connor Murphy, posted a fantastic blog about, I think yesterday, is a world where when I go to buy a coffee, right? Got my coffee right here. I go to buy my coffee. The barista can't see into my bank account. The barista can't see all the other purchases I've made on my credit card. The only thing the barista can see is what I'm buying right then. Maybe they can see a couple digits of my credit card. Maybe they can see my name. Maybe they can see my payment history at, that coffee shop, but they can't see anything else, right? And it's what we call commercial confidentiality, or confidentially commercial, whichever way you prefer. It is the expectation that we feel society has grown comfortable with. It allows the government to do what the government feels they need to be comfortable with. And it's kind of this like middle ground, right? Is it perfect? Would most people prefer more privacy? Probably. But is it something we've grown comfortable with and accepted? Yes. And so I think a big question, and David, I would love your opinion, is, how does this impact the growth of finance on chain, right? Like, are we really going to see, like, instead of people trading with a brokerage, are they really going to trade in like these fully private, dark pool markets, or do you see most people just saying, "No, I'd rather just stick with what works because XYZ, and I don't really need that level of privacy. It doesn't matter to me. I'd rather be compliant and maintain this level of what I know."
So if you look at what is the indicator that you could use, I would argue that you could look at the adoption of asset management products on chain as how comfortable are people with the state of privacy. Uh, the the type of products that are available on chain to invest into as a passive investor have actually evolved a lot over the last few years. And recently, I mean something like 8 months or so, they have actually gone like ballistic. If you look at the amount of TVL that is going on vaults on different strategies, it has grown exponentially. Now, when we go and dig into what's happening behind them, what you see is that consistently there is very, very little adoption for strategies that would suffer inefficiencies due to privacy. So you don't have like a fund that is going there and executing a bunch of really sophisticated strategies in a complete transparent way, and people are putting a lot of money into it. I think the closer that we go to that, maybe some of the hyperliquid vaults. To be honest, compared to how successful the hyperliquid protocol is, their vaults are very unsuccessful, if any, as a proof of how the privacy can be counterproductive in this case. Then we go and we look at where are things actually growing, and we look at things like Midas, for example, growing into like almost 2 billion TVL in 4 months. And you go and look at what are they doing, correct? They're tokenizing for the most part off-chain funds, correct? So the chain is just basically a representation of a token, but the activity is actually happening elsewhere. If you think about Athena as a tokenized fund product, which they might argue is not, but it looks like it is. So you have a funding based strategy on the back of this product, and then you tokenize it, and it acts like basically like a fund. But the strategy is not been running on chain, correct? They just mirror the liquidity to centralized exchanges and execute everything in a private way off chain, right? And so you already even see that in the blockchain technology where privacy is not yet implemented at the core protocol level, a lot of adoption is actually going in direction where people are and users are definitely seeing value into having access to yield that is one click, and that it's managed by a third party that is keeping that privacy from what they're doing with the strategy. That's only kind of like the first, very, very first basic layer, because today that's where the industry is. Like in the future, what we want to see is a bunch of other use cases, from mortgages to insurances to different sophisticated asset management products, beta products, directional products, whatever it is. But today the whole asset management space is either tokenized funds or credit tokenized strategies, correct? If you go and you look at everything that is happening with Morpho and with of the likes, they are credit-based strategies. And why are those strategies working? Well, when you have a credit-based system, latency and quality of execution and transparency may be less important because it's not direct trading. But we already saw, I think it was like a month ago, the first glimpse on how uh, things can go wrong very quickly, even in money markets, uh, uh, and cause a lot of trouble into the space, which could have been prevented with the correct amount of privacy. Correct. So there is definitely an amount of privacy that is needed to prevent systemic risk. Question is how much is that? So going back to your example or your analogy of the barista, uh, yeah, the barista doesn't need to know your balance. Yeah. But if you're running the shop, I guess you want to know how many customers are going to be there, so you buy enough coffee to supply your customers. Otherwise, you might be running a very inefficient shop.
Definitely. Yeah. It's very much so tricky, right? Because it's this cross between how much information is needed to facilitate the actual execution of an action versus how much do businesses want because they can take it. And I think it's like that's always been the hard part about like the cloud computing era, right? I think like the Facebooks and the Twitters and the, you know, I don't know, the Googles are all great examples of, well, they take every little bit of data they can because that data is valuable to them, but they don't need it. But that's not necessarily financial, right? When it comes to finance, there's a lot more strict regulation, at least in the United States. In Europe, obviously there's, you know, GDPR and whatnot, which is, for better or worse, like supposed to be good for consumers, but it makes an absolute headache for pretty much anybody trying to build anything in Europe. And so I think there's like all these levels, right? And the one thing that I think is really interesting and something that we're really excited about, Scale Shell number one of the day. When we think about privacy and building it on chain, today we have the ability to do fully encrypted transactions. So we're actually one of the only blockchains, if not the only one that I'm aware of, that has the ability to do hybrid, basically optional encrypted transactions all the way at the consensus level. So let's say, you know, there's a AMM or a lending protocol on a Scale chain. What we have the ability to do is make it where every user can say, I want my transaction to be fully encrypted from the time it leaves my wallet to the time it executes through consensus, right? And so that means that, you know, if I'm looking to trade $10,000 of, you know, USDC to USDT, or I'm looking to, you know, buy a money market fund on chain, that trade is fully protected from start to finish, right? There is no additional liquidity risk from people that are essentially buying the order flow and front running, right? Which is, I am not a financial expert, but my understanding is that there are very strict rules around buying order flow and how it is actually executed and settled in different countries. That's like a very there's like a lot of rules and regulations around that to ensure that it's as fair as possible. And if people are front running, it's like very clear that they're paying for that. And like there's all sorts of notices they're supposed to give or whatnot. So that's like side number one. You can correct me if I'm wrong on any of that. But then the second part that I think is potentially more interesting, and this is something we've had a couple of posts on our forum so far, but we're actively working with, you know, some financial partners on this, is private balances, right? So I don't know if this is the perfect solution. I think everything at this point for like actual compliant privacy is trial and error. So again, would love your feedback, but what we've kind of come up with, and shout out to our amazing engineering team for this, is the ability to make balances private, but keep the entities public, which is very different from your traditional privacy where you have entities that are private and balances that are public. And so what it actually allows for is, for example, I could have $10,000. Let's say Key Rock is operating a money market fund and I want to give you $10,000. When I give you that $10,000, Falcor has no idea how much I gave you. Falcor can see that I interacted with Key Rock or a money market fund, but he cannot see that I interacted with that money market fund for $10,000. It could be a penny, it could be 100 million, but he has no idea. And so it's a different type of transparency and privacy that we're kind of thinking about right now. So just curious if, obviously that's just one example of what we're doing, but curious how that makes you think about where the current headaches are and how that could start to solve some of these problems that you're kind of laying out.
Yeah, absolutely. So look, when I look at this, the whole content privacy, I'm trying to kind of like start from the other way around, where I look at what is definitely a net positive, what is for sure something that should be, and everything that should not be private, let's just let it be free. Let's assume that freedom of information is going to be a net positive. But what are the things that for sure have to be in non-private, and then maybe let's obfuscate the rest. So you have like the two extremes, the two ways to look at it. For me, especially as a, you know, from the point of view as a user of all this technology, the main concern is all about systemic risk. You know, of course, I don't want people to know exactly how much money we have and so on. But at the end of the day, does it really affect me? Well, what affects me the most is if things break, and everything that can allow me to understand where there is risk concentration, I'm gonna assume is something that I would really hope I can get access to. It doesn't have to be private. Yeah. And so I'll give you an example. So you have money market, you know, protocols where people are getting access to a base rate for USD, and then they can, at their own risk, go and borrow that and loop it into a higher yield asset, which is basically a higher yield with a higher risk, right? So every time that a user is looping something on chain, that just means that they're trying to arbitrage the risk-free rate to whatever other risk that they're taking, and they're assuming that the risk they're taking is statistically lower than the yield that they're getting paid. Maybe they're wrong, but that's what they're doing, right? So how can I understand concentration and where are the problems? So you have I don't know, $600 million in a pool that is looped. I would want to know that from the 600, 450 are from one company. That I think might be important for systemic risk. Do I need to know a lot of information on how other things happen for the money to get there? Probably not. And do I need to know particularly what else is the company doing? Well, it depends, right? So if it's related to that action, I might want to, and especially if I can track it. So maybe I'll touch upon, maybe for the first time, on the topic of agentic finance, and how, even though agentic finance doesn't yet seem to have the capacity to really run the execution layer efficiently, it's already pretty much capable to run the monitoring layer. So just understand what's happening and detect when systemic risk accumulates and becomes an actual risk, so that hopefully you can we can take actions before that event happens. And so how do we find that this balance where we keep privacy such that the strategies and what we do doesn't get cannibalized by people that are front running and trading against us, but that it's still enough that we can understand the system and prevent broader risk. That is kind of like the balance that we would want to find.
Interesting. There's a lot to unpack there. You're much too smart financially for me, so please excuse me if I'm not as sharp as I normally am. Finance is, I will publicly admit, not my primary. So I always feel a little bit dumber when I'm talking to people that live in finance. I think what's really interesting to me, right? I want to pull two things out of there. The first is, I think you said, if I'm comprehending this correctly, what you're kind of saying is that there's never going to be a silver bullet perfect solution for privacy. It's almost protocol dependent, it sounds like, in the sense of some things maybe make more sense where we would rather have the, like, who's moving money obscured and the amounts they're moving. We don't really care about, like, maybe we want that public, but we don't want the two parties to be known, or multiple parties. Whereas there may be some things where we absolutely want the balances obscured. We don't want people to know how much is locked in the protocol or in the money market fund, but we're okay if the entities in the protocol are known. That's like an acceptable, it's an acceptable trade-off. So it sounds like what you're saying is, as on-chain finance continues to grow, depending on the product, we almost need different types of privacy and different types of layers of that in order to. Am I saying that right?
Yeah. So like there's nothing wrong with entities being known, correct? Like, I mean, I guess we're not afraid of people knowing who we are. That is absolutely
Right.
fine. Yeah. Um. The the way that I look at it is, everything that contributes towards understanding risk is a net positive for everyone. And so how do we detect for each individual, let's say, financial primitive that exists, what are the data types that enable discovering and understanding risk?
Mhm.
And what are the data types that enable, uh, let's say, the price discovery in an efficient way? And so, ideally, what you would want is, you want to make everything that is related to my execution private, but everything that is related to my discovery of risk public, if possible.
Right.
Yeah. And the
Yeah.
reason the reason that you would want that is that if you think about how you know generally things go wrong in financial markets. In hindsight, everything is super evident, correct? There is a lot of accumulation of risk in one spot, and then after the fact, it's very easy to detect where that failure point was. But because there is a lot of intransparency in the existing system about that, then it fails, correct? So when we rebuild finance on chain, I think we need to be very critical that some of the level of privacy in the existing financial system is also a net negative to understand risk. And
Right.
we suffer in the digital asset industry from I would call fake advertisement, where if you look at every protocol out there, everybody says, I have this thing and your APY is 20%. I have this thing, my APY is 30%. I have this thing, APY is 5%. Yeah. Nobody talks about what is the risk that you're taking to be able to interact with these things, right? And so if you have an agentic future where there are these things going around, depositing money into different places, how can we expect them to behave in a rational way where they only have half of the story, correct? They only understand what is my potential reward, understanding my potential risk. So I do this thing at the company where when people come to me with an idea of something that we could trade, something that we could put money into, it's okay, the yield on this is, let's say, 10%. Okay. And they think, I think it's good. It seems to be pretty low risk. uh, I always try to kind of like switch the concept of risk reward and say, okay, so if it's 10% and you would have to hold this asset for 10 years, so you're telling me is that what is the probability that this thing doesn't go hack or you don't lose your money in 10 years? And if you think the probability is pretty high, actually your risk reward ratio is very bad because it means you make 10%, but like, you might lose it all with a 1/10 probability over 10 years or maybe more, correct? Maybe over 3 years, and then you have a negative risk reward ratio. Uh, Ideally, what we want is these agents to identify risk so that they can take and understand rational behavior. And as we have more data that accumulates in terms of like smart contract performance or market risk, they can start abstracting both risk and reward. And
Right.
so it's going to be very important that we find a way to not obfuscate the risk data. Um, Otherwise, all of these algorithms are going to be running around, which is basically what they do today. They just run around with half of the story and taking actually pretty bad decisions almost always.
Yeah. No, that makes a lot of sense. And it's actually funny because this was one of the things that always comes up when you start talking about privacy is everyone wants privacy, but they also want to showcase what they have. And so it's this really like contrarian, like two sides of a very different scenario kind of thing where people are like, oh, I want to give people private finance, but I also want to show that I have $5 billion of TVL on my chain or in my protocol. And it's like, well, the problem there is if you look at, if you look at the traditional finance world, all of this is done through self-reported information, right?
Yeah.
Like if you're like, I mean, look at like a Vanguard, right? They've got trillions of assets under management, and that's all functionally, like at the end of the day, it's self-reported accounting information. They're saying this is what we have and this is what we hold, and we've got like armies of accountants who are verifying this, but like this is all internal on our books, right? It's not sitting there publicly. And so I think it's going to be a really interesting trade-off to your point of whether we make who's moving money and who's doing the actions private, whether we make the actions private or whether we make the balances private, or whether we do some combination thereof. We're always taking a piece of information away. And the more data you take away, functionally, the dumber agents get because they quite literally operate based on context and information. The more you give them, the better they do. The less you give them, well, they're pretty much useless and you're better off just asking a human being most of the time.
Yeah.
And so what I think will be really interesting, and I would love your thoughts on this. Something I've been thinking a lot about is will we today we trust centralized entities to re-report public data, right? So like we've got blockchains, and we trust entities, right? Private entities like Etherscan, like Block Scout, like, I mean, we had Deparator. I think they're actually shutting down. Token Terminal, Nansen. We've got all these entities who essentially take public data and they then resell it or reshare it. And everyone that I know is kind of just like, I'm going to trust it because I don't want to take the time to verify. And so it kind of negates one of the biggest values of blockchain, which is the fact that anybody could verify it. Is it easy? Absolutely not. But is it doable? Technically, yes. Although in reality, you're always trusting someone because you're not going to go write, you're not going to go write your own, curl protocol to read a blockchain or write your own terminal, right? You're always trusting someone somewhere. And so I'm curious if, as privacy becomes more prevalent in our day-to-day lives in terms of on-chain finance, do you think that we're going to get to a point where we see self-reported data become something that agents and people are actually taking seriously? Like, for example, let's say Aave deploys onto SKALE. SKALE is, private from a balance perspective. So we can see who's using Aave, but we can't see any of the money in Aave. We can't see how much is in Aave. We can't see any of the money moved in and out of Aave, right? Because the chain is private from a balance perspective. We can see who's moving money. Do you believe that Aave would do some sort of like private reporting that says, okay, here's our reserves, here's all our APYs, here's all of our different set of information, and it's just like, hey, you got to trust me because I'm Aave and I'm worth like billions of dollars, and you can't see it, but I can.
The agents would trust it. There's also a reality where all of privacy technology has the capacity to enable a subset of users to have access to the data, correct? So in that
Yep.
particular case, Aave has access to its own data. Yeah,
of course.
and
Yes.
then they could self-report it, or they could build an abstraction on it, and through a CK proof, say we are solvent. I'm not going to tell you how much money we have, but our balance is bigger than our liabilities, so we can assure that, and we can, according to this equation, prove that it's true. And we can also give abstracted percentage-based data. So for example, they could say what percentage of the liquidity it comes from the top 10 depositors, which is going to give us concentration risk without not giving us the numbers. And they could do that through a CK proof, correct? And then that would actually give us a little bit of what I hope would be the ideal world, where everybody starts focusing on risk and giving the information that is reliable for decisions to be taken. So now, imagine you have privacy, you have that middle layer of abstraction. Aave puts together a pretty good dashboard with a secret proof that showcases the data do actually come from the SKALE network. And there, in live monitoring, all of a sudden the agents see that, I don't know, like 50% of the liquidity is done by one user. Might
Sorry.
actually say do something different, correct? Like the risk or something.
Yeah.
Quick question. Is there a way, my mind just went somewhere, where you can give information to an agent that is not readable to the user?
Tease.
Yeah, no, of course you can. So, you have also now this whole, I don't know if you guys have looked into this whole idea of like homomorphic encryptions. So you can basically do that, correct? So you can, there is technology for it. It's a little bit too expensive for it to be functional, but yeah, for sure. There are ways.
Yeah. That's part of as part of what we're building. We have don't know. I think to your point, it's very expensive right now. So we'll see if it's something we'll see what the demand really is for the current cost. I think we need the compute capabilities of the world to double a couple more times to get to feasibility. But as part of what we've got with Byte, we can actually do fully homomorphic threshold encryption, where there is FHE across a number of trusted execution environments, which are essentially the nodes in the network. And so that would allow, for example, someone like Aave, right? They've got their smart contracts and they could have, user deposits, and the balances of everything change without ever being decrypted. It all stays encrypted at all times within the trusted execution environments. You also can do that. It's not as strong, but I think it is a good step in the right direction from my understanding of talking with much smarter cryptographers than myself. You can do this today through trusted execution environments. Like, you can allow for data to be pulled into a T, and then you can allow manipulation and actions to occur within the T, and then the result comes out of the T. And the only people that actually know what happened are those that functionally control the T, right? And so there are some different things you can do, but I think David, your point there is very. It's actually something I've been thinking a lot about, which is the world of privacy. We fall into the blockchain trap a lot. We fall into the crypto trap a lot. It's not actually a blockchain trap; it's a crypto trap. The crypto trap is the belief that only one thing will win. That's the crypto trap, right? It's like only Bitcoin can win. Only Ethereum can win. Only this asset or only that protocol can win. Like, I feel like a lot of people get into that mindset of there can only be one, when, well, society proves you wrong, because there's always going to be more than one, because that's how human beings are. And I think when it comes to privacy, it kind of sounds like you're leaning the same direction as me, which is it's not going to be a one-size-fits-all thing. You're going to have layers and layers and layers of this, and different types of privacy protocols will enable different feature sets on top of different on-chain financial protocols, which is kind of what I was getting at earlier. You just summed it up far more concisely.
So these agents, they have a conflicted interest, if you think about it. So they are, from their own game theory, they should be motivated to not share anything, but want to access as much as possible. So how can we find a balance? Because if basically all of the data is generated at some point through systems that are incentivized to not share, but what they want is to access data, correct? So you need to have these intermediary third parties that are capable to, trade data to say, this is okay, we can share this because this is useful, and this allows us to reduce systemic risk. This is not okay because it actually creates more risk by giving too much access to information so people can game the system. These are basically the two paradoxes, correct? If you share too much, people are going to take advantage of it, and people are going to, and agents are going to figure out the behavior for the agents, and the whole thing will become a little bit of like a circle jerk where they just, somebody detects the behavior of something, and then from that they can like play a game of trying to game the other agent, right?
Yeah.
And so you want to basically optimize for both things to happen, like, so for the capacity to game the individual actors to not exist, but the capacity for understanding system fragility to be global, to be accessible to everyone, so that behavior is more rational. I believe that in a agentic world, these agents are going to be more rational than humans. They will be. And so
Oh,
if they
yeah.
have a better understanding of risk, they're going to take less risk than we do, because often we take a lot of unnecessary risk because we just don't understand the risk we're taking.
Definitely. I fully agree with you there. And I think it's actually funny because I think even today, I do think it's very possible. It is very possible to make an agent almost like perfectly rational. It's never going to be perfect, but like by modifying their reasoning, the randomness, their temperature, like all the basically toggles within a LLM, you can turn an agent into like an almost perfect deterministic model, which in turn tends to drive it toward rationality. The more creative you allow it to be, the greater chance that it goes out and hallucinates, makes up some numbers and says, oh, I should make that trade because it's going to yield 10,000% APY this year. And you're like, no, I do not want that, right? Whereas by reducing its kind of like creativity and making it more rational, right? You're basically saying just use what you actually have available. And if you don't, then stop or tell me you don't know or something like that, trigger something. We seem to be making a lot of progress on that front with agentic systems. And I'm pretty excited to see where that kind of takes us, because I think for me, I actually think that before what's like a very common phrase, like before you can walk, you have to crawl. Before you run, you got to walk, so on and so forth, right? Like it's like baby steps, right?
No, pause. You just butchered that so hard. I just want to say you that was awful.
I said there's a
saying.
Yes, that's it. It's just you got to walk before you can run. That's it. That's all it is.
I'm still drinking my coffee. Let me be. Let me be. I'm not perfect. Okay. Okay. Thank you. Thank you. Thank you. Thank you. Thank you. So, anyways, apologize for butchering it. There's steps to everything. And for me, one of the things that I kind of am feeling right now is that specifically for agentic finance, I think we need to see, in my opinion, a significant increase in agentic data for finance and humans learning how to work with agents from an on-chain finance perspective before we actually get to execution and management. So what I mean by that is today, probably one of the biggest, I don't know, there's a few, there's like what, 4 or 5, like we'll call them big use cases in AI right now. Maybe I've left a couple off, but you've got obviously your raw chat, right? Just prompt, like basic prompt chatting. You've got image generation, you've got agentic coding, and then you've got enterprise search. Those are kind of like your four big ones, I would say. Chatting encompasses a lot of stuff. What I think is really interesting is there's one specific one in there that's been picking up a lot of steam recently, and it's enterprise search. And it's one of those things that the average human being is never going to talk about because they don't care. But it's really relevant to conversations like this, I think, because it represents a major shift in how businesses operate. And I find that a lot of people tend to pick things up at work and bring them home. And so what I mean by that is enterprise search is this concept that your business has a whole bunch of data. It might be siloed across one entity. It could be siloed across 1,000 entities. These are entities, these are like big corporations, right? These are like, you've got data in Google, in Gmail, in Azure, in Notion, in whatever, right? You've got all this data. Slack, right? Good one. Now that we have AI, it's really great to be able to ask AI questions and it goes and finds information for you. That's like the basis of enterprise search, essentially. You got a bunch of information, how do you surface it back? What I think is really interesting about on-chain finance is the one area that I'm going to argue is, I think, David, something that you seem to be saying, I'm going to say it in a slightly different way, is why would you do anything if you don't actually know the risk? Like, why are you taking positions when you're not actually evaluating the full risk? And the problem is human beings tend to see upside far more than we see downside, right? So it's a lot easier to say, oh, this thing was worth $10 a couple of years ago. Now it's only worth $2. That means there's, all this upside. When in reality, if you look at the fundamentals, it's probably telling a different story. And so the reason I bring this up is because from an AI agent perspective for finance, I think there's a huge opportunity for the fundamentals, the analysis, the research to be given to humans before we ever get to execution. The ability to say, hey, go take a look at my portfolio and tell me what I should be thinking about. Like, should I be rebalancing? Should I tax loss harvest going into the end of the year? Based on the fact that Circle just got an OCC approved banking license, or OCC, one of those two. Is there upside in Circle now? Not financial advice. Is there upside here, right? How do I get from right now? I'm doing all this manual research and I take very few positions because I'm terrible at trading and I tend to not do anything that I'm not going to take long term. How does AI and agentic finance actually get us from like human beings make bad decisions and research is really hard. There's so much information. There's so many things that if you're not a professional, like you don't even know exist. You learn by like accident or you just read them wrong. How do we get to there? And do you agree that that is a good stepping stone toward true agentic finance? You kind of take one, and then if we get to that point, then it's a lot easier for the agent to turn around and say, I recommend this. Do you want me to proceed? As opposed to, hey, I'm just going to go do this. There's no information. I just think I'm going to go do this. And it just goes.
If you look at the the amount of the on-chain capital that is allocated to direct active trading compared to passive, it's been growing more towards the passive side, where in the early days of the industry, majority of people wanted to experiment and test things and try things around. As time goes by, I believe that a lot of users have come to the realization that maybe they are not the best traders, and that maybe they shouldn't be managing their own money because they just lost a lot of money. Yeah. And so there's nothing in my head that tells me that it wouldn't be different with agents. I still believe that in the future, money management is something that would just become so much cheaper and so much more accessible that there is very little rational reason why you shouldn't just use third-party solutions that are abstracting all the complexity instead of you kind of like trying to ask an agent to build you a long short portfolio because you think that you're smarter than the rest of the world. So I still don't think that changes that. Now, what is the definition of agentic finance, and does it stop at trading and money management? And that's the part where I think it doesn't. I think it's much bigger than that. So I think when it comes down to money management, I'm not 100% sure if that's going to be the big use case, to be completely honest. I'm very doubtful that people are just going to start saying, hey, build me a strategy that does this and that, or deploy my capital according to a portfolio with certain characteristics. I mean, they could, but the fact that the action comes from the user, that means that it's still biased towards the belief of the users in the market, and majority of users will not beat the market. So, but finance is a lot more than money management, correct? Finance it's the pillar for building a society, getting a house, and negotiating a mortgage. It's a process that is tedious and annoying. What you would want is, in an agentic finance model, you'd have each bank has their mortgage agent, and then your agent goes and understands everything about you, understands your income, and goes and talks to the banks like, bro, give me a loan. I want to do this. Brings up all the information after negotiating with three banks. Hopefully, it's private so that the banks don't actually know what rate they gave the agent independently. Otherwise, they can plot together to beat the agent and give a higher rate. In that case, the privacy is going to give you a net positive outcome for the user and a negative outcome for the enterprise. And so the bank will be motivated to do it without privacy. The user will be motivated to do it with privacy. And in that reality of agentic finance, where the agent interacts, iterates, negotiates, and then trades or makes a financial transaction that is for a real outcome that is not only money management, but is to buy a piece of real estate or finance the school of your kids in 20 years or get a life insurance. I think that's all going to be automated because people don't like that. Nobody likes to call the bank to ask them for a mortgage. It's annoying as you can get. And so hopefully all of that gets automated and is much nice and neat, And then the agent is also aware of, what is the interest rate of the central bank. So if the bank is actually offering a rate that makes no sense, the agent can say, okay, this bank is just trying to take advantage of you. The interest rate, the central bank is at 3. The bank's offering you 6. They're qualifying you as a high risk person. What can we do to lower your risk profile? And so the agent might actually just help you to lower your risk profile so that you become more appealing to the bank. And I find that to be a better use case actually than just figuring out how to speculate in the market with the agents, which is possible, but I guess I would assume some asset managers would take the lead on that.
No, I fully agree. I think Ben Miller, our head of marketing, says it all the time. He's like, I don't want AI to automate things I like to do. I want it to automate things I don't like to do. And I think it's a really, really good kind of, I think it's like a really good baseline for, we have all these
like
evals now we have evals for LLMs, right? Like, and if you don't know what an eval is, it's basically you use an LLM generally to evaluate another LLM. So it basically helps you understand how good the output is, and is how all the big companies and model companies do their benchmarking. And I think that's kind of like the baseline eval for human adoption is like, if, for example, if you're a human being who loves to travel, you're probably not going to automate booking your vacation with a travel agent, with like not like a travel agent, like a travel AI agent, because you like to do that. You like to explore, you like to do the research. For some people, sure, they don't like to travel. And when they have to travel for work, they're like, I'm going to plug this into the AI agent, it's going to go to town. And for others, they're going to be like, no. For me, I said that I will probably never let the AI agent execute anything that has financial actions without my approval. I'm happy to let it do all the research. Like, I hate booking flights. It drives me crazy. I hate booking flights. The prices are all crazy. Finding a seat stinks. It's just annoying. Like, I hate it. I am happy to let an agent go and find me the best flight, but I don't want it to just go book it. Like, I still want to double check that. If an agent could find me cheaper insurance, great. Like, show me what you got. But I still don't want it to just go execute for me. I still want to approve that. And so I think that's just my opinion, but I do agree. I think a lot of people are just, they will get to the point where they're like, I don't even want to deal with it. I don't care. I'm just going to delegate it. And I actually think entire industries of monitoring and maintenance are going to pop up around that. The same way today that you have like what is it, like LifeLock and like Experian Alert for like your social security number. If you're in a country where social security numbers are a thing, you can get like protection for your social security number because everyone's social security number is been leaked like 10,000 times. I think that we're actually going to see like human-focused monitoring companies pop up specifically for monitoring this. So if you're like an insurance company and you want to have like an AI agent that is available to go find all the insurance brokers and find the best insurance for an individual, and like that's all you do, you just do that AI agent that does that, you may then pay out to a third party who does monitoring for your users. And that's like an opt-in service. And that human then opts into that so that if something goes wrong, that's like almost insurance for AI agents. Oh, there's the new industry, AI agent insurance. That's what we need. Then it solves all the problems. Yeah.
So what?
No, you don't.
Like a huge call center in the Philippines and India, like people like looking at. It sounds like when Amazon tried to like trick people into believing that they were automatically analyzing what they were buying in the shops.
Oh, that's actually, that one's so funny. When it was there was a company, I think it was out of Bangladesh, that was used for one of those, but. I see, Falco, you're shaking your head. I want the thoughts here. Why don't you agree with AI agent insurance?
Because it's stupid. But
what do you mean?
Because shut up. It's stupid. It's stupid. Stop talking. But you know what is a good idea, and I don't understand why it's not done, right? Is leveraged insurance. Why isn't that a thing?
Why does everything need leverage?
You know, if I go to Binance, right, and I'm, you know, let's say putting $1,000 on a 10x long on Solana that for some reason out of the blue crashes, why couldn't I have bought insurance prior to that?
How much are you willing to pay for insurance?
Working on it. I'll get back to you.
You working on it? Bro, my brain just went, wait, that could be really good. Like, how many, like after the other month, right? That would have been the greatest time to launch it after that crash the other month when everyone sold everything and everything like dropped to like nothing. Imagine if you had like, let's say it's like getting insurance.
He already said he's working on it, man.
Yeah, I know. I'm running through my idea, okay?
Yeah, but he already said he's building that. Why can't we go talk about the idea that no one's building?
I don't want AI insurance.
Why?
It doesn't make sense.
Deletes your life? What if it deletes your life? What if AI goes out there because you tell it, hey, I need cheaper insurance, and it looks in your bank account and says, you got no money. So I'm just going to remove your insurance. Then you get in a car accident, and now you have no car insurance.
You're not allowed to drive without car insurance.
But what if the AI agent removes it? It deletes it. You have no idea because it's an AI agent. That's my point. Then you have AI insurance that you have another AI insure, and it's like an infinite loop of AI insurance.
We should really
AI to insure the AI to insure the AI.
We should really just stick with the runner show. Like, you know.
Okay, fine. Back on track. We've only got a couple minutes.
We got like 2 minutes left. All right, here we go.
Here we go. Don't blame me.
Okay. Final thoughts. 2 minutes left. 1 minute. David, what does the future of agentic finance look like to you? Let's say 5 years time from now, what does agentic finance look like?
Transparency to enable systems to get fair value for users, right? So it needs to go in the direction of, a agent under total transparency is just a piece of technology that everybody can gain. And so it has to go the other way. It has to be capable to act on its own and negotiate in your behalf.
Nice. I like. Zoya?
I think that it needs to be embedded and absorbed by entities that are capable of obscuring all complexity. And I think once they get that combined with various layers of privacy like we discussed, I think we start to actually see it come to life. So essentially, it's a necessity to see actual on-chain finance become something that the average human being is comfortable using. Like, I think if you go to the average person right now and say, hey, put your money here into Aave and you can earn, a consistent 4%, which right now is higher than almost every US money market you can find that is legitimate. Aave is higher from what I've seen. Correct me if I'm wrong, David. But you can't tell the average person like, hey, this is easy. Aave is coming out with an app, so hopefully that does make it a lot easier. And I think that could set a precedent for a lot of how on-chain finance goes. But I still think the average human being will want that abstracted and more private than, at least to the level of privacy they get from a bank account today. So, and they'll give it to agents.
And AI agent insurance. Alrighty, guys. Thank you so much for joining. David, great conversation, mate. Super, super excited to continue seeing what you guys are doing. And yeah, I'm excited to learn more about your insurance for leverage trading.
Thank you so much, guys.
Hopefully we haven't leaked it. So yeah, anything further, my friend?
This was awesome. Always just appreciative of David, individuals like yourself coming on and sharing so much knowledge about what you do and how it impacts the space. So just grateful to have you, and hopefully we'll have you back soon, because this was a lot of great stuff, even just for me to learn. So always, just thank you so much for joining.
100%. Thank you, everybody, for tuning in, and we'll see you again next time on Scale School. Bye-bye.
Bye, guys. Thank you.